Sir, very happy morning to all. Sir, as you all know that we are doing computation of GST payable. In that, we are in set number 3. When I am doing set number 3, I read a question which has been asked in November 2019. So actually, there are certain prerequisite to solve this question. I'll read one or two line, then I will do the prerequisite and I will come back to this question. Sukhdev is a mining engineer. He has crossed the threshold limit for registration under the GST law and is duly registered in the state of Maharashtra. He effects the following transaction in the month of March and want you to compute the tax payable in cash. He has filed bond or LUT to claim benefit from zero rated supply. Following are the particulars furnished by him. Point number 1. Question number 1. Sukhdev, being an operating member in mining and exploration services at Mumbai High, has provided certain services to the joint venture in which he is also a participant. So there is a joint venture. In that joint venture, Sukhdev is an operating member. He is provided certain services to that joint venture. As we all know that, as per section 7 subsection 1 clause AA, activities or transaction by any person other than an individual to its members, constituents, or vice versa for cash, defer payment, or other valuable consideration is a supply. That means Sukhdev has provided certain services to the joint venture. Member has provided certain services to the joint venture. That means it's a supply under section 7 subsection 1 clause AA. He believes that consideration received from the joint venture is cost petroleum and not taxable. So a new term we are coming forward called as cost petroleum. So through this question, I wish to make you understand what is cost petroleum and what is profit petroleum. So from this part, we are deviating to cost petroleum and profit petroleum. Fantastic to the core. So we are going to talk about cost petroleum and profit petroleum. As we all know that petroleum is the richest source of resource. Since petroleum is a part of natural resources, the owner of petroleum is the central government. Because it's a part of natural resources. But central government can't dig that petroleum. So what generally central government will do is, central government will set up an auction. Central government will set up an auction. And they will say that whoever are quoting the highest bid, central government will say that the right to explore or right to produce petroleum or natural gas, we will assign to you. So there will be one central government. They are having the mining rights. That right will be given to a company or a person who are quoting the highest bid. For example, central government is there and central government, sir, has given the license or the lease to a company which is a business entity called as X Limited. What rights they gave? They gave the right to explore or produce or petroleum or natural gas. From here onwards, this X Limited, we can call it as miner or OEPC, oil exploration and production contractor. So I am the central government. You are the OEPC or miner. You won the auction. The highest bid has been accepted. As a central government, I have given the license or lessor-lessee relationship, lease relationship to the miner or the OEPC, my dear lovable students. We all know that services provided by government or local authority to a business entity is taxable under reverse charge basis. So the person who are liable to pay tax is the OEPC or the miner because they got some service from the government. Fantastic to the core. For this, you are supposed to pay me consideration. What consideration you have to pay me? The consideration what you are supposed to pay me is a royalty. But this is a little different way of transaction. What central government is saying that we are not only satisfied with the fixed royalty, but also we want variable royalty. That variable royalty is based upon how much profit you are earning. So, in order to assign the right to explore or produce petroleum or natural gas, you have to pay as royalty. That is irrespective of the amount what you are digging, my dear lovable students. And you do your business. You got a right, for that you are paying some consideration. That is called as royalty. That is a fixed sum. For that you are liable to pay tax at RCM. There is no doubt about it. And you do your business. And after you do the business, sir, like this, a P&L account you prepare, which is nothing but, man, find out the profit petroleum. Find out the profit petroleum. What is profit petroleum? Which is nothing but the total value of petroleum produced in a particular year. For example, sir, they have produced, example I am saying, 1 lakh liters of petroleum, 1 lakh ton of petroleum, whatever it may be. Out of that, in order to produce that petroleum, they would have spent 5 crore or 10 crore or 20 crore, as the case may be. Out of this 1 lakh liter of petroleum, if they sell 60,000 liter of petroleum, they can incur that cost. They can recover the cost incurred. So they have, sir, extracted 1 lakh liter of petroleum. Out of that 1 lakh liter, if they sell 60,000 liter of petroleum, they can recover the cost, whatever they have incurred. Then that 60,000 liter of petroleum is called as cost petroleum. That 60,000 to the level of 60,000, it is called as cost petroleum. And 1 lakh minus 60,000, 40,000 liter are there. That is called as profit petroleum. So what is profit petroleum? From the total value of petroleum produced in a year minus the cost petroleum. What is cost petroleum? Cost petroleum means the cost incurred by the OEPC for producing the petroleum. For producing the petroleum. So from the total sale value of the petroleum generated, if you reduce the cost petroleum, you will get the profit petroleum. What central government is saying that out of this profit petroleum, 40,000 liters, you gave us, sir, 25,000 liter. The balance 15,000 you keep. Or 50-50, 60-70, what 60-40, whatever it may be, my dear lovable students. So this is what happening. Now question arises, why out of that profit petroleum we have to share with the central government? It is because of PSC. Between the central government and this guy, which is, sir, business entity X Limited, who are located in taxable territory, shortly called as OEPC, already they would have entered into an agreement called as PSC agreement. In that PSC agreement, the government would have mentioned that in order to allocate the right to you, you are supposed to pay us the royalty. That is a fixed term. That is not exempted. That is taxable at RCM. There is no doubt about it. But my dear lovable students, from the total sale value of petroleum, if you reduce the cost petroleum, you will get the remaining as profit petroleum. Of that profit petroleum, we can share in some proportion or some ratio. That proportion or that ratio will be predetermined in PSC. In PSC. Now, what are the GST issues? This is the transaction what is happening in the cost petroleum and the profit petroleum. What are the GST issues? So petroleum classified into two categories, cost petroleum and profit petroleum. For your clarity, once again, I'm repeating once again, what is cost petroleum? Cost petroleum means, sir, the amount recovery of the cost incurred by the, sir, OEPC. That means out of 1 lakh liter of petroleum, if I sell 60,000 liter of petroleum, if I can recover whatever the cost I have incurred to that extent of petroleum extracted, we will call it as cost petroleum. Like our basically, sir, break-even point and the margin of safety. The break-even point is nothing but the cost petroleum. This is break-even point. And the profit petroleum is nothing but the margin of safety in costing language. Fantastic to the core. So the question arises whether taxable in the hands of OEPC or miner is the question. Sir, everyone were having a doubt. If the miner or the OEPC is incurring various costs to dig that petroleum, for each and every cost, whether they are liable to pay tax on RCM or not is a question. Government clarified that no. If you are incurring exploration cost, development cost, production cost, these costs you are not incurring for the government. These costs you are incurring for your own business, because if you incur this cost only, you can extract the petroleum. Once you extract the petroleum only, you can find out the cost petroleum. Once you find out the cost petroleum only from the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Sir, from that profit petroleum, as per the agreement what we have entered in PSC, you have to share us our share of profit, central government share of profit. For the balance is your share of profit. For that only this much drama you are playing. So these are not supply made to government. These are self-supply. These costs like exploration cost, development cost, production cost, you have incurred for your business, not for our business. Not for our business. We have not provided any service to you to incur the exploration, development or production cost. But reality is something different. Because you got right to assign. You got right to assign the natural resources. So there is a supply from the government side. For that only, my dear lovable students, you are getting the consideration. So you paid the consideration as what? Royalty. Hello, sir. You paid the consideration as royalty. For that, you are liable to pay tax at RCM. But my dear lovable students, this exploration, development cost, production cost are incurred for the purpose of finding out the profit. These costs have been incurred for yourself, not for ourselves. So for this, you are not liable to pay GST. So that is the question with regard to cost petroleum, whether taxable in the hands of OEPC or miner, whether the OEPC or miner is liable to pay tax under RCM. No, sir. They have put a circular. That circular is saying that the relationship between the government and the OEPC are not partnership or partners. They are consignor consignee, like licensor licensee, like lessor lessee. So there is no service to government. It is service to self. It is self-supply. So no GST liability for cost petroleum. So one line summary of the entire discussion is there is no GST liability for the cost petroleum. Now coming to the next one, man. Coming to the profit petroleum. Profit petroleum. What is profit petroleum? Profit petroleum is equal to total petroleum minus cost petroleum. From total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Fantastic to the core. So I will give you, central government have given the right to use to OEPC. Yes, sir. Sir, this central government can be called it as licensor and the OEPC can be called it as licensee. Actually, there is a supply of service, because supply of goods means, sir, every kind of movable property, anything other than goods or services. So this is a supply of service. For this, the licensee is supposed to pay consideration to the licensor. That consideration will be paid in two forms. Number one, royalty. Number one is what? Royalty. This royalty is taxable in the hands of the OEPC. At RCM, there is no doubt about it. Even for the OEPC also accepted that, yes, there is a service provider. We are the service recipient. The service is right to assign. We got that services. For that, we are paying consideration as royalty. We are ready to pay tax at RCM. Fantastic to the core. But share in profit petroleum, as per the GST law, actually there is a supply of service. Yes, sir. Central government has provided the right to mine. Without that right, my dear lovable students, the OEPC cannot dig and find out the petroleum. For that, They specifically said that one part of the consideration you have to pay in cash by way of royalty and other by way of profit petroleum. We all know that definition of consideration. Consideration means consideration includes, consideration by, and consideration excludes. Consideration means payment in money or otherwise for the supply. Yes, profit petroleum is otherwise for the supply. So there is a supplier, there is a recipient, there is a consideration. As per section 7, subsection 1, clause A, my dear lovable students, supply includes all forms of supply of goods or services or both, such as sale, barter, transfer, exchange, license, lease, rental, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. Right, all the elements of supply has been satisfied. Actually, this is a supply. And for share of profit petroleum, tax has to be paid by the OEPC under RCM. But the issue is, how to find out the profit petroleum is what the question. Sir, profit petroleum is equal to sale price of the total petroleum extracted minus the cost petroleum. Sir, how you will find out what are the elements of the cost petroleum? Surely for the miner or the OEPC, exploration cost will be form part of it. There is no doubt about it. For this element, there is no GST because this cost has not been incurred for the government. This cost has been incurred by the OEPC for the OEPC. So it's a self-supply, no GST. For development cost, yes, sir, this is also form part of cost petroleum. This has been incurred by the OEPC for the OEPC for their business. Sir, this is not a consideration paid by the OEPC for any services provided by government. So for this also there is no GST is there. Production cost also, my dear lovable students, has been incurred by the OEPC for extraction for their own business. It is not a consideration for any services provided by government, right? And royalty, but royalty has not been for the purpose of extraction. Royalty has been paid by the for OEPC for getting the right from the government. So this is a consideration paid. Royalty is a consideration paid by the OEPC. There is no doubt about it. For the services provided by the government, it is a supply as per section 7, subsection 1, clause A. For that, as per section, RCM section, the business entity located in taxable territory is the person liable to pay tax at RCM. There is no doubt about it. You know one thing, this is a cost to the OEPC and this will form part of cost petroleum. Actually, from the profit petroleum, some portion of the share will be taken by the central government. Even that is also a cost. Even that is also a cost to the OEPC from the angle of OEPC. You think from the angle of OEPC? Yes, sir. That is also a cost. But what, sir? The act of the Oil Act, not as per the GST Act, is saying that when you are calculating the profit petroleum, central government share of profit petroleum should not be included in the cost petroleum. Should not be included in the cost petroleum. Basically, they are saying that you should not calculate on an inclusive basis. You have to calculate on an exclusive basis. Exclusive basis. That means this way, without including the central government share of profit petroleum, by including these four things, my dear lovable students, you have to find out the cost petroleum. So from the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Profit petroleum classified in two categories: share of central government, share of OEPC. For the share of central government, actually, sir, GST is liable to be paid as per RCM. But OEPC made a representation to the central government that as per the Oil Act, you are not allowing us to include the central government share of the profit petroleum in the cost petroleum component. Hence, it is not, cannot be claimed as an expense by ourselves. You have to exclude us from paying GST on that. Government felt that yes, it's very reasonable. So government put a notification in 2018 called as 5/2018 saying that central government share of profit in profit petroleum is exempt from GST. No need to pay GST on this component. But for royalty, there is GST, my dear lovable students. There is no doubt about it. So one line summary of the entire discussion is central government will call for, do an auction, will take the highest bid, and will give that right to exploration to some business entity. For that business entity has to immediately pay some amount of royalty, which is fixed royalty, and they will start digging that. Once the commercial production starts, yes, if the case has won, there are oil or petroleum in that area, sir, whatever cost they have incurred to do that, to that extent, petroleum, whatever recovering, they are called as cost petroleum. From the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. From that profit petroleum has to be shared between some share to central government and some share to the OEPC as per the agreement what they have entered. The question is, sir, actually three issues are there. Is GST liable for the cost petroleum? No, sir. GST, there is no need to pay GST on cost petroleum, because those costs are incurred by OEPC for their business, not for any service has been provided by the central government. Point number one. Point number two, my dear lovable students, is, sir, on royalty, GST is liable to be paid? Yes, because that is not a consideration which has been incurred by the OEPC for themselves. That is a consideration paid by the OEPC for service which has been received from central government, which is assignment of natural resources. For that, OEPC is liable to pay tax at RCM. That is the second issue. For the third issue, for the profit petroleum, will the GST attracted? Yes, as per the GST provisions, it is a supply of service. Consideration is there. So it is a supply as per section 7 subsection 1. So GST has to be attracted. But central government white notification number, sir, 5/2018 said that, my dear lovable students, sir, that is exempt from GST. With this background, read this English, you will be able to appreciate or understand. Concept, sir, recovery of exploration and production costs, that is called as cost petroleum. When an oil exploration and production contractor, oil exploration and production contractor, this guy is called as OEPC, oil exploration and production contractor, get license or lease to explore or mine the petroleum crude or natural gas from the government. It enters into PSC, that is production sharing contract with the government. So based upon PSC, the central government will enter into a contract with, sir, OEPC, oil exploration and production contractor. Fine. What is cost petroleum, sir? As per the PSC, which is profit sharing contract, sorry, production sharing contract between the government and the oil exploration and production contractor, in case of commercial discovery of petroleum, yes, we found out the petroleum, the contractors are entitled to recover from the sale proceeds of all expenses incurred in exploration, development, production, and payment of royalty. This is what I've written here. Exploration, development, production, and royalty, my dear lovable students. Portion of value of petroleum which the contractor is entitled to take in an year for recovery of this contract cost is called as cost petroleum. So, if we dig 1 lakh liters of petroleum, out of that 1 lakh liter, if we sell 60,000 liter of petroleum, if the OEPC can recover the cost incurred to that amount of liter, we will call it as cost petroleum. Fantastic to the core. Coming to profit petroleum, which is nothing but total petroleum minus cost petroleum. Sir, further, a total value of petroleum produced and saved from the contract area in a particular period as reduced by cost petroleum is called as profit petroleum. So from the total petroleum, if you reduce the cost petroleum, you will get the profit petroleum. Perfect clear. GST white notification number 5/2018. The government share of profit petroleum, as we all know that, sir, total petroleum minus cost petroleum is equal to profit petroleum. Profit petroleum has to be classified into two categories. Number one, share of central government and share of OEPC. Sir, this share, we are going to talk about this share, sir. The central, sir, government share of profit petroleum, which is consideration paid by the contractor to the central government for the service of grant of license, lease to explore or mine petroleum crude and natural gas, is exempt from GST. Actually, this is also a consideration. There are two considerations are being paid by the OEPC. One consideration is royalty, which is a fixed sum. Next, additional consideration is profit which is a variable sum because we don't know how much is the profit petroleum is going to come. So for this profit petroleum, there is no GST is what are exempted under notification number 5 bar 2018. Fantastic to the core. Now the next issue question arises, is cost petroleum is not a consideration for services to government and hence not taxable. Cost petroleum are the cost incurred by the OEPC for their own business. It is not a consideration for any services provided by the government. Hence, my dear lovable students, that cost petroleum is not a consideration. Hence, it is not liable to tax under RCM. The relationship of oil exploration and production contractor within the government is not that of partners. They are not. There is no partnership between the government and the OEPC, but that of licensor and licensor or lessor, and licensee or lessee in terms of the petroleum and natural gas rules. Having acquired the right to explore, as an OEPC, I acquired the right to explore or exploit and sell petroleum in lieu of royalty and share in profit petroleum. Contractor carry out exploration and production of petroleum of themselves and not as a service to the government. Hence, cost petroleum is not a consideration for the services provided by the government to the OEPC. But inside that cost petroleum, royalty paid will be there. For that royalty, OEPC is liable to pay tax at RCM. There is no doubt about it. There is no exemption for that. Only for profit petroleum, we are having exemption. Model production sharing contract. Para 8.1 of model production sharing contract state that how we are having DTA, model tax convention, like that. If we are writing a contract between the central government and that OEPC, there are certain model conventions are there. State that subject to provisions of the PSC, the contractor shall have exclusive right to carry out petroleum operation to recover costs and expense as provided in this contract. What contract is saying that? It is the rights of the OEPC to recover the cost. That means still the cost petroleum, the OEPC is having right. The oil exploration and production contract all petroleum operation at their sole risk, cost and expense. It is a duty, responsibility of the OEPC to dig. If there is any loss, you have to bear the loss. If there is any profit, till whatever costs you have incurred, you can recover. The balance is called as profit petroleum. In that profit petroleum, central government needs share. That share will not be set at the end of the contract based upon, wow, superb mining, then we will be asking 90%. No. Such cheating will not be there. In the start itself, they will say that if there is any profit petroleum, you have to share 50-50, 60-40, 40-60, like that. Hence, cost petroleum is not a consideration of service to government of India and thus not taxable per se. So, my dear lovable students, the second clarification. So, royalty is a consideration. That is the first clarification. Royalty is a consideration for the service provided by central government. Hence, royalty is liable to tax at RCM. Number two, cost petroleum is not a consideration for the government. It is a cost incurred by the OEPC for themselves. Hence, they are not liable to pay GST at RCM. Third clarification. Profit petroleum actually satisfy all the conditions to be taxable because it's a supply under section 7 subsection 1 clause A. There is a consideration even though it is not in money, it is in form other than money. So my dear lovable students, all condition of taxability has been satisfied. But still it has fallen under section 11. It has been exempted by government saying that the central government share of profit on the profit petroleum, for that the OEPC is not supposed to pay tax at RCM. But exception they have given. However, cost petroleum may be an indication of the value of mining or exploration service provided by operating member to the joint venture in a situation where the operating member is found to supply service to the oil exploration and production joint venture. For example, sir, 5 people are, there is a joint venture and there are 5 members to the joint venture. If one of the member is incurring cost on behalf of the joint venture, the cost petroleum may be an indication of the value of mining or exploration service provided by the operating member to the what venture? Joint venture. In a situation where operating member is found to be supplying service to the oil exploration and production joint venture. So if any, sir, cost petroleum has been incurred by the member of the joint venture, we can say that some other person has provided service to the joint venture. That will be covered under 7 subsection 1 clause AA. For that, GST will be levied. So what are the main takeaways from this notification and circular? Sir, take away number 1 is saying that royalty is a consideration paid by the OEPC for the services provided by the government. Sir, GST will be applicable at RCM. Number 2, cost petroleum are not the consideration paid by the OEPC for the service received from government. Those are the costs which has been incurred by the OEPC itself. Hence, no need to pay GST. Sir, for profit petroleum, actually GST is there because it satisfied all the condition, but because of notification issued under 5/2018, it is exempt from GST. Exempt from GST. These are the 3 main takeaways, my dear lovable students. I hope that you would have got a brilliant idea about the cost petroleum and profit petroleum. Till now, if you don't know about this cost or profit petroleum, and if you are having clarity on cost and profit petroleum, sir, please highlight that in the comment, because to take this effort, that will be a reward from your side, my dear lovable students. We will meet you with a different video, with a different term, which is relevant for our examination. Till that, thank you and bye.